All right, so if you're a trader who uses gamma exposure, let me ask you something. Have you ever been staring at your screen, looked at two charts for the exact same expiration, and seen two completely different flip point values? It's super confusing, right? Well, it's a really common thing, and today we're going to clear this up once and for all. So let's just dive right in.
So yeah, this is the question we get all the time. You're just looking at your screen, you see this huge difference, and you start to wonder if something's broken. But it's actually a fantastic question because the answer really gets to the core of how you use these powerful tools the right way. So what is going on here?
Okay, so look at this. On one side, you've got the Gamma Profile flip point sitting way down at 29.80. But then you look over at the marker term flip point, and it's all the way up at 31.24. I mean, that's a massive difference, right? We're talking over 140 points. So your first thought is probably, is one of these wrong? Is this a bug? And the answer, believe it or not, is no. This difference isn't just intentional, it's actually the key to really unlocking what GEX can do for your trading. All right, to solve this little mystery, we're going to need a couple of clues. Let's start with clue number one, what I like to call the market snapshot. And we see this in the GEX by strike chart. The best way to think about this is like a photograph. It's just a single picture of the market frozen in time.
So the GEX by strike chart is, well, it's pretty much exactly what it sounds like. It takes the price of the underlying asset right now, like this very second, and it calculates the gamma exposure for every single strike price. The two words you got to remember here are current and snapshot. That's it. It's a static picture of this exact moment.
And here it is. This chart shows you exactly where everyone's positions are, right now. See those bars? Each one represents a position at a specific strike, all based on today's price. This chart answers one very specific, very important question perfectly. Where is all the hedging pressure located at this very moment? So because this view is all about the now, it is absolutely perfect for your day-to-day tactical decisions. You use this snapshot to find those really specific support and resistance levels, or maybe you're trying to pick the perfect strike for a new options trade, or even just setting a super precise entry or exit target. It's all about the where. Okay, on to clue number two. Now, if our first clue, the GEX by strike chart, was a photograph, then this next one, the Gamma Profile chart, is more like the weather forecast. It's not about what's happening now, it's a dynamic simulation of what could happen next. And this is where things get really cool. See, the Gamma Profile doesn't care about just the current price. Instead, it runs a whole simulation. It actually uses the Black-Scholes formula to figure out what the total gamma exposure would look like if the price moved up or down. It's a projection, looking forward into a bunch of possible futures. And this chart right here, it's the perfect picture of that idea. This curve is basically answering a bunch of what-if questions for us, like what happens to market stability if the price drops 5%, or will volatility get crushed if we rally 10%? This chart isn't telling you where you are on the map, it's telling you what the terrain and the weather will be like as you move. So naturally, you're going to use this forecast for your bigger, more strategic thinking. You're trying to get a feel for the overall volatility regime. Are we in a calm, stable market, or is it about to get really choppy? You're looking for those true turning points where the whole personality of the market could shift. It's all about understanding the how and the when of the market's behavior. All right, so we have our two clues, right? We've got the static snapshot, the photograph, and we've got the dynamic forecast, the weather report. Now it's time for the big reveal. Let's connect the dots and finally solve the mystery of those two different flip point numbers.
And here it is. The big secret is that difference you're seeing, it's not just normal, it's completely expected. These two charts are calculated differently on purpose. Why? Because they're designed to tell you two totally different things. One is a measurement of right now, the other is a prediction of what's next.
And check this out, because this is the real aha moment. That net GEX value you see in the snapshot, it's literally just a single point on the much bigger Gamma Profile forecast curve. The snapshot tells you the GEX value at the current price, but the forecast, that shows you the entire landscape of what could happen. They're not two different stories, they're two parts of the same story.
So let's just break this down one more time really simply. The GEX by strike, our snapshot, only cares about the current price. It shows you where the positions are right now, which is perfect for finding those precise support and resistance levels. Meanwhile, the Gamma Profile, our forecast, is busy recalculating GEX across all sorts of potential future prices. And that's what gives you the most accurate idea of where the entire volatility regime is actually going to shift. Okay, so this brings us all the way back to our original question. As a trader, sitting at your desk, which number do you actually use? Which one matters more for your decisions?
Honestly, it's a super simple two-step process. First, you're going to use the GEX by strike, the snapshot, to see where all the current hedging pressure and positions are sitting. Think of it as your immediate intel. But then, for the most accurate estimation of where the market's whole personality is going to shift, for that, you absolutely have to use the Gamma Profile forecast.
So, if there's one thing to remember from all this, it's this right here. The Gamma Profile tells you how the price is likely to behave. The GEX by strike tells you where the important levels are. They're not competing, they're a team. And really, you should never ever use one without at least looking at the other.
So let's go back to our analogy one last time. The snapshot gives you a super detailed map of exactly where you're standing right now. The forecast gives you the weather report for the journey ahead. To get where you're going safely and successfully in the markets, you absolutely need both. So the only question left is, now that you have the map for today and the forecast for tomorrow, how are you going to plan your journey?